Hello, this is Manish Patel with the EII Capital Group. Today we're going to be going through a trade review where we're going to show you how you could use Fibonacci to trade crude oil. So we're going to show you a quick swing trade that we took with crude oil using the Fibonacci concepts out there. So let's begin. Before we begin, let's go for a normal disclaimer to state this is for education use only. We're not soliciting you buy or selling a particular instrument. If you do so, you're doing that at your own risk. All information is owned by EII Capital Group, cannot be copied or distributed without our written permission. We are broker neutral, but we have to show you a charting package. So today we're going to show you e-signal from interactive data. So why are we using Fibonacci? That's a magical question. Fibonacci is one of the most popular trading systems out there. A lot of people gravitate towards it. Reason why is Fibonacci exists in every form or fashion out there in form of real life. The relationships between the human fingers, the arm with the forehand, the rose petals, all of them exhibit a Fibonacci relationship. It's something that we've learned in school, and it's something that we continuously see every day in and out. Along with the popularity, the problem comes down to is there's a lot of confusion too. There's so many different methods that people use to trade Fibonacci. Today we're going to show you how to accurately trade crude oil using Fibonacci and showing you how to trade it accurately. So let's begin and start looking at the trade, the crude oil. So what you need to do is look at the higher time frames and look to find a trend. So what we did was we looked at the daily time frame for crude oil and we noticed that it was in the bearish trend. So let me give you an overview looking at a whole bunch of bars here of the crude oil. So this is a daily time frame here, and this is a snapshot basically in January 22, 2016. And you could see that this is exhibiting a nice little bearish trend here where it goes down, goes up, and then it goes down here. So this is a nice bearish trend there that's going down. That's exactly what you're looking for. Once you find a trend that's going down, what you want to do is take advantage of that momentum. So you want to see some profit taking that's going to occur, which is exactly what these blue bars here are occurring. So that's profit taking for the bearish trend here. And what you're looking for is to predict where that profit taking is going to stop and at that point reverse. At that point of reversal is where you want to place your trade. So if you looked in this is the zoomed in version of that chart. And if you look, this is a small little trend that's going down. This is the two blue bars here that are pulling back. So this is the profit taking that's occur. In Fibonacci, what we're looking for is a retracement for up to 50% or 61.8. Those are the two Fibonacci levels that you want to look for a trade on. So what we've done is we showed you these levels here. We marked them up. The 50% is the purple line. The green line here is the 61.8. And this is basically the key Fibonacci levels here on the daily time frame. Now, we look for the Fibonacci retracements on a higher time frame. Once price gets to either the purple line or green line, then what we do is we go down to a smaller time frame and look for Fibonacci retracements in the same direction, which is bearish in here on the lower time frames. And that's what you call multiple time frame Fibonacci trading. Once we get to those resistance values on the daily time frame, the 50% or 61.8, what we're going to do is we're going to go to the lower time frame. For our trading scenario, we went down to a 60-minute. We chose a 60-minute compared to 10 and 30-minute due to all the volatility that's been going on with crude oil. We want to make sure we get a good reward risk ratio with a very low risk, and that's one of the reasons why we went to a 60-minute. Also, if you trade on a 10 and 30-minute, you're now playing with the machines, so what we want to do is avoid that scenario. So on a 60-minute here, here's a zoomed in chart of that particular chart. And this chart here shows you exactly what the chart looked like February 1st, 2016. And you could see here, when we got to the purple line here, we bounced off there, then we came back here and so forth. And then we eventually got to the green line. What we're looking for is that price to get to these Fibonacci values here. And then what we want to do is start to notice either a consolidation pattern where it's resisting, breaking that resistance value there, or we want to start seeing pivots going lower. Okay, and what we normally do in our trading plan is that we don't look for things at the 50%. We typically look at them at the 61.8 because that's the boundary condition and it has a lower risk factor. Since we're dealing with crude oil futures, we want to always key off the 61.8 Fibonacci level. So that's exactly what happened here. We got to the 61.8, and at that point, we're now start looking for a consolidation pattern or a pivots to go lower. And you could see here, it consolidated here, and you could start seeing here that the pivot highs here, you could see this one here, even though this pivot high is lower than this one, the closing prices are still going higher. And so that was not good. The very first time you start seeing a scenario where it could go lower is this scenario here, where it stopped here right at the green line here, which is the daily resistance, and it had a lower pivot high than the previous one. So as soon as we saw this bar here close, we're now starting to look for a trend to go to the downside. So what I've done here is I zoomed in now to that little section here, which is the consolidation pattern on the 60-minute. And you could see here that this red bar right here, we held this resistance value from the higher time frame, and also this made a lower pivot high than the previous one from both the high of the bar and the closing price. That's exactly what we're looking for. Now what we're going to do is we're going to look for a trend to go down, and then as soon as we see that trend to go down, we're looking for a pullback, do a Fibonacci value. Once we get that, we're going to trigger the order and move forward. So let's move forward. We'll show you exactly what happened here, and you could see here that it started going down. Once we had a pivot low, we had a scenario here, pivot low, this really didn't pull back. The pullback here was not a Fibonacci 50 or 61.8 at all. Once we came to this level here, right there, and what we did was we measured from the green line here, which is the daily resistance value, to the pivot low here, and we pulled it back. We noticed that the Fibonacci 50% was here and the 61.8% was here. Okay, now we chose the 50% retracement here because if you look at this value here and you draw that line here, that matches these pivot lows here, and you have a lot better price accumulation here right at that level compared to the 61.8. And that's one of the reasons why we basically enter the trade right here, and we use a stop above that and trigger the trade to go down. So let me show you the entry. So this is going to be our entry, which is at the 50% level. Our stop is going to be a buffer above the 61.8, and then what we're going to do is we're going to choose what we call a preserve mode value, which is the 50% support off the higher time frame. Now, what do I mean by preserve mode? That means when you get down to this level, this is more than a 3-to-1 reward risk ratio. So what we want to do is liquidate 50 to 75% of our positions at that point. And that's exactly what we're going to do. So this is our trading plan moving forward. We have a very small risk, and we have basically a very good reward risk ratio, which is exactly what you want to do from the trade management side. So this is your chart setup. So let's move forward. And let me show you the results here. So you could see the results here of what happened. So we basically entered here at $33.27, where we shorted crude oil here on the 60-minute. Our stop was $33.52. So if you look at it, this is about less than 25 cents risk here. And you could see that when we got to this purple line here, we liquidated 50 to 75% of our positions, and then we let the rest ride. And what we did was we used a method using pivot highs with a buffer as a trailing stop. And what happened is eventually here, right at $30 a barrel, we basically got stopped out of a trade for a nice profit. So you could see here for 50 to 75% of our positions, we walked away with a 300% profit. For the rest of the positions here, we took in over a 10-to-1 reward risk ratio very safely, and we protected our profits. This is exactly how you sit there and trade with a very good reward risk ratio using Fibonacci's. Now, the method that we use to trade Fibonacci's is very unique. We did not only Fibonacci in its simplest form, but we also took in concepts of Fibonacci clustering, and then we did something unique that most people don't do, which is Fibonacci at multiple time frame analysis. Okay, so the way we sit there and we could trade successfully with Fibonacci compared to other people is through the multiple time frame concept, also with very strict rules for trading. Okay, and if you think about it, when you start dealing with Fibonacci, these are all the different ratios here. There's a lot of ratios that people have to deal with. Okay, and that's one of the things that we simplify in our Fibonacci workshop. We sit there and we tell you exactly which Fibonacci values are relevant, which ones you use for entry, which ones you use for profit targets, which ones you're going to use to start protecting your profits. So we dumb down all these values and we simplify things to a point you could sit there and execute very easily. Okay, so what I want to do is I want to show you our Fibonacci workshop and show you the modules in here. So here are the modules that we offer for the Fibonacci workshop. Module 1, it goes through the introduction. Module 2 talks about the mechanics. What are the Fibonacci? What are the values, the Fibonacci values that are relevant? Which ones are used for entries? Which ones are used for stops? Which ones are used for targets? Then we're going to go for Module 3. We're going to talk about the pivots. We're going to show you exactly how you sit there and you use what parts of pivots to draw these Fibonacci values from. Then we'll step you through all the different methods for retracements, all the different methods for extensions. We'll talk about what has worked, what hasn't worked, and so forth. Okay. Then we'll talk about Fibonacci clustering that a lot of people use. We'll talk about advantages and disadvantages with that. Then we'll talk about money management, which is key in order for you to consistently make money. It's kind of like you producing a salary for your job. Then we'll talk about multiple time frame analysis. We'll follow through with Module 9 going through examples. Module 10 will basically execute a trading plan and give you an exact trading plan on what you should be doing step by step by step in order to successfully trade Fibonacci. And then Module 11, we'll talk about advanced Fibonacci, what you could do as a next step, and how to optimize the Fibonacci system. If this is something of interest to you, or you want to learn how to trade crude oil or any other instrument for any time frame, you could sit there and buy this cheap workshop here. And if you notice, we're selling it for a very cheap discounted price here, where you could get the workshop downloaded for $249.99, or you could buy the DVD, which is basically includes the shipping option for $289.99. Just click on the links below these boxes and it'll take you to the order form and you'll be ready to go. These DVDs, believe it or not, are traders DVD. There's no sales or marketing fluff in them. They're pure trader DVDs. That means we talk about trading in this purest form. We give you a trading plan and we show you how to execute it step by step, doing multiple time frame analysis that works for any instrument and any time frame worldwide. So if you have any questions also, or you have any problems ordering, you could email us here at info@eiicapital.com, or you could call us at any of our global office locations here. Thank you and have a good day.